Hey, what is up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're covering the topic of our week 6 portfolio updates, the big sells, the buys, and additional buys that we've done over this past week. There was a ton of volatility during last week, right? Within 2 days, the market had sold off between 2 to 3%. And again, within just a few days, made it all right back. So we use a little bit of that volatility in order to sell out of some positions that had spiked nicely and then roll it into something that had been under, a little bit underwater. So we're going to go ahead and showcase all of that in today's video. So if you guys are brand new here, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up. Also, check out the pinned comment down below. There's a link to join the completely free Discord server, along with some awesome referrals if you guys are interested in Public, Webull, SoFi, right? Depending on whatever platform you may be interested in, there's some goodies down there as well. So with that said, let's go ahead and jump into week 6 sells. Now, we made some interesting sells. Now, I'm going to go ahead and say that I have been holding Meta for quite a while. Now, I bought Meta back on November 12th of 2025. My initial buy price here within my Roth IRA was $608.90. And inside of my traditional IRA, it was $610.53. So I pumped about $34,000 into Meta in my Roth IRA, about $32,000 into my traditional IRA. Let's go ahead and scroll down and we'll look at the chart for the past bit here. So from November 12th, we can see a big sell-off. So this was their last earnings. They missed on some earnings back in this November timeframe. The Meta position had fallen from around $750 at the time. Prior to that, it had actually nearly broken $800. So it fell off a cliff and was trailing at around $610 when I began to buy into it back here in November. You can see here at the $610 point, I began accumulating shares right around here. Now it did pop up and I held on to it, right? It was still trading under that 200-day moving average. And during the last few weeks here in early January 2026, it had actually fallen back below my initial buy price. So you actually had a couple opportunities here to sell, lock in some profits, buy it back in at a, just at the same or less value as I had previously bought it. And then boom, earnings came out. It beat on both earnings per share and revenue, and it popped to a recent high of $740 before selling off back down to where it was at when I made the screenshot here before opening this past weekend. I think it was Monday, pre-Monday. It was trading at $676.30. So it has definitely been on a bit of a volatility trend. And while Meta is a great company, a little bit of their spending in CapEx was a little bit higher than what I was expecting. So I went ahead and took this opportunity with their move to the upside to liquidate out of the position for Meta. So down here, I went ahead and liquidated out of my positions completely out. And we can see here that within the Roth IRA, instead of having that initial, $34,000, we did liquidate about $39,863.62 out. And within our traditional IRA, we had put in $31,747 and we liquidated out there the $41,272.80. So you can see here the difference. We went into the Meta position with roughly $66,000 of cash going into that position. And when we came out of the position, we came out with around $81,000 with cash. So we definitely made some good return, right? We sold these positions at $711.85 and $711.60. So we didn't quite get the top right, but it's not about getting the top. It's just locking in profits, and this is in a retirement account, so I don't have to worry about paying any taxes on this, any sort of capital gains. Inside of my Roth IRA, I'll never have to worry about paying that off, right? When I begin withdrawing it after 59 and a half. Traditional, that's later on, depending on wherever my tax bracket's on, after I'm 59 and a half. But for now, completely tax-free, don't have to worry about it. So I didn't quite lock in 740, but we locked in here at 711. So right around here, we saw that volatility beginning to take place. People are beginning to be worried that CapEx expenditures was a little bit over, right? I don't know if they were going to be. I know Tesla doubled down on their CapEx. I know a couple other companies doubled down on their data centers. But we can see here that Meta continued to sell off and has been selling off here recently into this week now that we're in here in week 7. So we went ahead and just took those profits and rolled out of the position. And that's where it leads us into what we bought with the equity, right? I had $81,000 sitting in cash in that account. And I don't like letting cash just sit, especially within a retirement account when there's a lot of opportunity out there in the market. So what did I do? Well, we went ahead and purchased Microsoft. Microsoft has been beat. I don't think I have a chart up here. Let me see if I can pull a chart. It has had some major volatility, hitting a high 52-week high of roughly $550 before selling off. And it wasn't anything to do with earnings. Earnings over the last 3 quarters has been excellent. They've had double digits in their earnings per share growth, revenue growth. Even their CapEx wasn't extremely high, and they guided better than expected for what I was looking at. So here, during their earnings, they beat on expectations, but the stock immediately sold off 10% after hours, opened up, and continued to sell off. So what did I do? I went ahead and began buying up Microsoft here. I purchased Microsoft here at $423.09 here, $423.30. Again, we're not trying to capture the bottom. It was already beat up. I saw that while it looks kind of like a falling knife at the time, we're basically reset Microsoft back to April 2025 after the release of, the fiasco with tariffs and prior to all of the recent tariff and overseas Iran and all sorts of drama that's out there on the market. Essentially 52 weeks of market erased to the upside. Even if I'm not able to capture the bottom, I'm still buying in at what I feel is a really good opportunity going into the future for this one to not only either, as you can see here, I purchased it here. I bought it back on February 2nd. And in that time frame from February 2nd right around here, it has continued to downtrend. As I said, I bought it right here on here at $420, I believe. Let me go. Yeah, $420. So I bought it right around here at $420. It has downtrended over this past week with the volatility out there that was out there in the market. It did downtrend a bit, but going into this week, it's been positive on Monday. It was up a nice amount on Tuesday during the market in the early mornings before kind of selling off into the afternoon, and I believe it ended in the red, but I think it's up after hours. I'm only slightly into the negative, which we'll go ahead and cover here in our weekly journal in just a few minutes. But overall, I'm happy with the re-entry position here, and there's not much to say here. We went ahead and just rolled our traditional IRA. We purchased 98 full shares, and then we had an additional 0.564 shares purchased with the extra capital. And then within the Roth IRA, I was able to pick up 94 full shares within the Roth IRA, and then an additional 0.362 shares of Microsoft. So $80,000 rolled. We took $60,000, we made it $80,000. We're taking $80,000. And in the future, I'd like to see Microsoft grow these holdings up to anywhere from $90,000 to $100,000. And then, right now, you're not really able to make a good sizable amount of capital while invested into the indexes. But if you're able to find those opportunities out there, such as I'm looking for with Meta when it was beat down, when it had positive earnings, but still beat down to a pulp, and I was able to pick it up for the cheap. Same thing goes for Microsoft. Microsoft is one of those, we're all using Windows computers more than likely. I have quite a few, like half a dozen Windows computers, operating systems. People are using Azure, their database. There's just a lot of opportunity with Microsoft in the future going forward. So that's kind of the buys right there of that rolling stuff. Now, the next position or next thing we're going to be talking on is some other buys. So yeah, that's right. We did make some additional buys within our individual account. So going back to our normal living out of our brokerage account. If you guys are not familiar, we completely live out of our brokerage account over using Fidelity. All the capital that gets created from the covered call ETFs, any miscellaneous income that I generate either from this YouTube channel, my other YouTube channel, affiliates, referrals, gets rolled into this brokerage account, and then this brokerage account acts as its core hub. Every single month, we load up the credit card with our daily expenses, our bills, and then every month when I get covered, income from dividends and stuff, I pay down the credit card bill down to zero. I pay down our mortgage. I pay down our car loan. Now, these past few months, we did have some excess capital, and we're able to reinvest that back into appreciating ETFs with a high yield with no to little NAV erosion, and that's been truthful going forward for most of the holdings, and then the whole cycle continues once again. So that kind of goes into the continuation of buying Tap Alpha or T-SPY. Tap Alpha's S&P 500. So T-SPY, we picked up 40 additional shares at $24.90, about $1,000. I went ahead and just pushed $1,000 into the account. We picked up about $1,000 worth of T-SPY. Same thing with TDAC. We picked up 39 additional shares of TDAC for $25.09. So again, we just have excess capital sitting in savings. And anytime that there's opportunity in the market, right? This past week, market shot down by nearly 2 to 3%. So I call that opportunity. If it went down to 5%, 10%, then you'd obviously want to begin adding more and more capital into it as it's accelerating to the downside. And you don't want to put too much initially. I would say like within the first 5%. Couple thousand, anywhere from a couple hundred to 1,000 is reasonable. If it drops anywhere from 5 to 10%, you can begin to add a little bit more, and then wait for that 15-20% where you can begin to add more to the boat, depending on the fundamentals out there and volatility and all that stuff that's going out there in the market, right? But that's generally my philosophy kind of there. So let's go ahead and get into the weekly journals. As we kind of said here, we're going to go ahead and chat about the week 6 weekly journal and dividend update. So journal wise, we can see here, I did these within Meta. So the IRA and the Roth IRA, Meta, we sold out of these positions. I had 58 shares in my IRA, 56 shares on my Roth IRA. The average price on these positions was $610.50 and $608.90. The current price of these Meta is $670.72. That's the current price as of today. We sold these shares when we sold. If we go back to our sells, we sold these shares as you see here, $711.85 and $711.60. So $711.85 and $711.60. So when we sold these positions, if we had stayed in those positions and not sold at all, Meta within our IRA would be down from our sell point 5.91%. If I didn't sell out of the Roth IRA from that initial sell point that I captured my gains, I would be down an additional 5.95% in that position. So by selling, I locked in a total profit there of $11,629.02. So that is just how much we made in equity between where we bought and where we sold. Okay, and what we bought with it, again, we bought Microsoft. Within the IRA, we purchased 98.564 shares. And within the Roth IRA, I know we purchased some fractional shares in there. So Roth IRA, we had 94 and then 0.362. So 0.362. Okay, there we go. Just to kind of make it more accurate. You can see our average price in there was $423.09, $423.29. The current price of Microsoft is $413.27 as of close on Tuesday. So right now we are down in the position that we bought into it, but we're only down 2.35%, and within the other one, we're down 2.01. If we compare our losses in our new position in Microsoft and in comparison to our old position on Meta, Meta's down 5.91, 5.95, whereas we're only down 2 to 2.35, and we locked in $11,000 of profits, which we were able to roll, buying us up much more shares of Microsoft, where if I had just kept Meta, I wouldn't have the shares of Microsoft in the future going forward. We'll see how this moves because this will just be a moving thing going forward. And I don't count this towards my realized profits and loss because this is inside of a retirement account. I don't really count that as taxable stuff. So I'm not counting that against my losses here. And then going in for my buys, we did buy TDAC and T-SPY. We bought these back on the 5th of February. I bought 39 shares of TDAC and 40 shares of T-SPY. There's my current, there's the current price, and there's my average price that I bought into these at. Since buying into TDAC, I'm up 1.78%, and I'm up 1.33% on T-SPY. And in terms of portfolio-wise, guess what? We did all that over here as well. So inside the dividend portfolio, I went ahead and made my increases here. So when I purchased T-SPY, I increased my share count by 40. This is actually pretty good. I have to make up. It's obviously not going to happen all at once. But let's see here. I decreased my previous T-SPY position by 78. So I'm trying to get back up to where I had previously at in terms of shares. But I picked up 40 additional shares. It went from 39.47 to 39.87. My previous income was 11.93 in that position. I'm now at 12.05. My old monthly income was 42.61. It went up to 42.73, so about $12 just by adding $1,000 into T-SPY, and increased my monthly income by 12, and increased my yearly income here from 51,135 to 51,280. So that's an increase there of what, $150. It seems a little bit high, but 12 by 12, it's $144. So it's within that area. And then that $1,000 going into TDAC, I purchased 39 additional shares of TDAC here. So we went from 37.50 to 37.89. Went from an income within TDAC of 1402 to 1417. So we increased just by $1,000. We increased our monthly income by $15 with TDAC. Our old monthly income increased from 4273 to 4287. So that's a good, about $15 of monthly income just by buying $1,000 of TDAC. And then for the year, we went from 51,280 to 51,455. So that's a pretty good difference there as well. A little over 200, right? Quick math equals H24 minus D24. So initially we increase our income. I can just do this as well. So we increase our annual income from buying T-SPY by $145, and then when we purchased another $1,000 of TDAC, we increase our annual income an additional $175. So all in all, for this past week, we increased our annual income by $320.18, and I'm hoping to grow that even more in this week, going into the 7th week of February or 7th week of 2026. So I think that's going to be it for today's video. We are still down pretty heavy on BTCI, but whether I held BTCI or held Bitcoin over on Coinbase, I would be holding on to it and not really doing anything with it. I've done that in the past. It's mine. It's sitting in the account. I know that by holding BTCI, I'm not going to be over with Voyager, Coinbase, Gemini, some weird Bitcoin cryptocurrency platform that's going to bankrupt and completely zero my account out where I don't have access to it. So I feel better just kind of holding and, getting BTCI as a whole. We are down in our T-SPY position by 1.26 and our TDAC position by 2.14, but the market has pulled back slightly this current week. So that's to be expected here. We're not quite at highs, and with I think the way that I have these, I don't remove the dividend out of my average cost basis, which the broker may do that or may not do that. So when you get your dividend paid out to you, so this 0.3023 or this 0.3741, it gets removed out of the share price and it's a return of capital. So I still haven't decided if I want to get that removed out of my average cost basis or not. I'll have to see what makes the most sense in order to track this correctly. But let me know down in the comment section below if you guys track the removal of your dividend from your share price. Is that something that your broker does? Is that something that you do yourself in order to get your true market return? Let me know down in the comment section below. But overall, I'm really happy. I'd like to continue working and tweaking some adjustments and how I'm recording the data in order to keep it up to date the best that it can be. So that is going to be it from this specific side. I still have to go through and do my budget recap. This past week we were out on traveling. We were celebrating our 16th year anniversary for me and my wife. So we went to the coast, we hung out, we saw the biggest sea lion exhibit on the West Coast. We were able to go down there, record some videos and have fun. The whole family. We were able to stay at a really nice place. Swam in the nice heated pool and hot tub and sauna usage. So we just had a lot of fun this past weekend, and I didn't get to record any videos, but the good thing is we got out of the house, we all got to have a trip together, and we all got to spend that quality time. So that is going to be it for today's video. Again, if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up, drop me a comment down below if you have any specific questions at all. And I do thank you again for watching the video, and check out the pinned comment. Would really appreciate it. Okay, bye-bye.